For the next hour, you'll be leaving the Show Me state and entering the Show Me the Money state. So stop what you're doing, grab a pen, and get ready to learn. Randy and Jake Floyd of Floyd Financial Group will be your guides for straight talk and honest answers about living the life you deserve in retirement. So prepare to be empowered. Now, here are your Show Me the Money hosts, Randy Floyd, Jake Floyd, and Jeff Shade.
Good morning. Thank you so much. Welcome to Show Me the Money with Randy and Jake Floyd, the radio show that gives you the straight talk and honest answers you need to reach your wealth management and retirement goals through smart investing and careful planning. On today's show, we're going to be talking about current events, also what to expect during the first 5 years of retirement, the importance of 401ks and IRAs, and finally, 5 key pieces to solving the retirement puzzle. My name's Jeff Shade, and as always, I'm just here to ask the questions, but the words of wisdom and solid advice, they come from 2 places, Randy and Jake Floyd of Floyd Financial Group. Randy, how you doing, my friend?
Doing very well, Jeff. How about you?
I'm doing great, thank you, considering that it is the first day of summer. Hey, Jake, how are you?
Doing well, Jeff. Thanks for asking.
Always glad to hear that. Hope our listeners having a great first day of summer. We certainly do appreciate you joining us each and every week here for Show Me the Money. All right, let's get into what's happening today in current events. So many things happen and it changes on a daily basis. But the No Kings protests or rallies, whatever you want to call them, they were all over the country this past week and the past 2 weeks or so. What can you tell us about these No Kings protests, Randy and Jake? Did they accomplish their goal? Did they make a statement?
Well, I think that there's a few places where I think that the left would consider that they went well, such as San Diego, San Francisco. You know that old song, San Francisco? I think it was Scott McKenzie, right?
Yeah.
And he said,
Are you going?
if you're going to San Francisco, you're sure to meet some violent liberals there.
I love that.
I don't think that's quite how it goes, but
It's going to be.
I'm most impressed by the fact that you're a young guy and you knew that song and who it was by.
yeah, I have to admit that I had to look up who it was because I knew I was going to do that. But I did know the song generally, and I think I was thinking about that this morning, just thinking about the places where these people go to riot are the same places where there's enormous homeless and illegal immigration populations and things like that. So
Yeah.
Florida, under Governor Ron DeSantis down there, the sheriff said, what did they say exactly, Dan?
He said, well, if you spit on us, you're going to jail. If you hit us, you're going to jail. Anyway, and he said, if you really attack us, we're going to shoot you graveyard dead.
Graveyard dead was the quote. And
I've
I think,
heard that saying before. That's quite an answer.
people just stayed home after that. There was a handful of rioters, but everybody's like, I don't really want to get shot graveyard dead. I don't know. I think that there's always going to be an excuse to not work and go protest, no matter what it is.
Yeah.
I think that, again, there was 20,000 people or so, I think, in like San Diego and places like that. But I think most of America, it was fairly fizzled out. I think there was maybe, how many people did you say, Dad, out here on Battlefield? Maybe 500 or so?
So I saw maybe 500 people lining the street out near the Battlefield Mall and between Fremont and the Battlefield Mall there. And that was probably about it. There's probably some other ones around town. But I was kind of shocked, too, because some of the people in line there were old enough to know better. But anyway.
Well, the news keeps telling him he's going to cut Social Security and Medicaid and Medicare. So I think there's people that believe that, which unfortunately the news is suspect at best on its best day. So I think there's some people that just still believe everything that they hear. But I think that's what a lot of people are concerned about is different benefits like Social Security getting cut. Eliminating waste is different than cutting benefits. I still am kind of holding out that we may see a comeback of this no tax on Social Security bill that Massey had put in. We got to get through the rest of these bills first. At one point, I was thinking there was a 50 or 60% chance. I'd say it's maybe a 30 or 40% chance now, but it's still a lot bigger than like 5% chance. I'm hopeful that that's one of those things that Trump's been doing a lot of the things he said he would do. That's another one he said he would do. And with time, we may find that he does that one too.
Well, I think a lot of politicians really, they're in it to get votes, and most older people vote in greater numbers than younger people. If you're cutting Social Security and Medicare, you're not going to get the vote of the older people. So I don't think that they're going to cut Social Security. They're not going to cut Medicare now for us already receiving it. I think anybody that cuts that's not going to get votes. But if you're already getting Social Security and Medicare, I don't think there's going to be any change to that. But certainly for Trevor, your son, Jake, I think that Social Security Medicare is going to be just a little bit different. Talking with Randy, Jake Floyd, Floyd Financial Group. Show Me the Money is our radio program. No Kings protests rally. And it occurred to me, too, and I went through the protests. Actually, there were riots in Los Angeles in about 1992, the Rodney King thing, and there were a lot of protesters and rioters out there who were just protesting and rioting and looting because it gave them a chance to protest and riot and loot. This is just what they do. I had no idea. I would think it was the same way with the No Kings. Looked like a lot of people were just out doing that. I don't know why I'm out here. It's just everybody else is doing it, and I needed a TV.
And Watts riots before that, it's the same group of people, like you said. They want free stuff, and if the government's not going to give it to them, they'll riot and take it on their own.
Yeah, and I don't understand when their sporting team wins a championship why they set things on fire either and climb poles and that sort of thing, too.
Because they want the free stuff, Jeff. It all comes back to the money.
Okay. All right. Well, let's hope that your local team doesn't win a championship because that way you can avoid the riots. I never understood that. Retail sales. Here we are, middle of the year. A little softer than normal. Is that right?
Yeah, a little softer than what they were expecting. Down 0.9% just over the prior month, which was quite a bit. And they backed out cars and a couple of things like that made it a little bit better. So the car buying thing is slowing down considerably. And we knew it would. But, again, we're starting to see a little bit of a slowdown there. We're seeing unemployment creeping up a little bit more. It's still really, really low. I think it's 4.3%. Continuing jobless claims are hanging around the 2 million mark consistently right now. So things are okay, and I think that long-term, we're looking at a really strong economy. We just got to get through a few things here. We got to get the big, beautiful bill, or at least part of that, get the tax cuts put in there permanently, give some people a chance to settle in on that. Also for business, to give business a direction as to how taxation may go for them. And then they can start to lay plans again. Of course, we got all the issues around the globe continuing to raise its ugly head from time to time, and who knows what that's going to look like. But overall, I would say that I am still, as I've said before, cautiously optimistic about the future and where the market will be. And certainly in a couple, 3 years, we're going to be looking back at this going, that was interesting.
All right, let's continue to talk about what's going on in current events. Unemployment, of course, is not an issue at this point. Amazon, I tell you, they've got their finger in everything. You can buy anything overnight from Amazon. You can even buy some cars on Amazon. Now they're challenging NVIDIA. What do you know about that?
Yeah, so they're producing their own AI chips, and they're going to go in, they're saying, direct competition with NVIDIA. And so that'll be interesting to watch that play out. If we look over our shoulder at things that Amazon has tried to do, they've been pretty successful over time, and their cloud business has been really the thing that's made them all their money over the last few years. There's a lot of margin there. They don't really make any money on delivering stuff to you and me, Jeff, but on the cloud business they do, and they're looking to expand that. And again, directly challenge NVIDIA, who kind of has that business by the tail on a downhill drag right now.
Right,
so far, NVIDIA's stock doesn't seem to be too worried about it.
Right.
I remember when Amazon just sold books, Randy. I don't know if you remember that.
Oh, yes.
It has grown so much.
I used to look at that back in the early 90s, and people were dumping money in there, and that thing never made any money, never went anywhere. It just continually lost money. I'm thinking, why are people doing this? And then, in the early 2000s, I was saying, why are people continuing to do this? And one guy said, well, Randy, Amazon, because I'm sitting here, businesses eventually have to make money, right? I don't remember who it was I was even talking to at the time, but he said, Amazon doesn't make any money, but it brings great value. And it is true that once you're used to getting things delivered, like the other day, I needed some shoes to go to the lake. I didn't want to go down there barefoot and step on sharp rocks or maybe a fish hook or something like that. So I decided I needed some water shoes. So I go out there and I look, and there's like 40 varieties of water shoes, and I finally narrow it down. I punch it in, and it says, oh, this is available to be delivered today if you order in the next 12 minutes.
That's amazing. I know. Isn't that crazy?
I'm like, I know there's a warehouse down here the other side of Battlefield in Brookline, but to get it there in like 4 hours is that's crazy, isn't it?
That is unbelievable. But I'm the same way, too. It's so convenient. I could drive 20 minutes over to Walmart from where I am and look for this or that. But I go, why would I do that? I can sit here on Amazon. I can do it. It'll be here probably tomorrow. So, yeah, Amazon, extremely convenient. But you can now buy, I don't know if it's Hyundai, but you can one of the brands of cars you can buy on Amazon. And there is just no end to what Amazon does. Trump is coming out with something interesting, his own smartphone. And when I heard that yesterday, I thought, well, he and Gene Simmons must have gotten together. Gene Simmons of KISS. Gene Simmons never found anything that he couldn't merchandise. You could buy a KISS toilet seat if you wanted to. You can have a KISS funeral. But why does Trump need a smartphone? We probably doesn't need it, but what do you think's behind coming out with a Trump smartphone?
That'll be a good question. I'm not sure what the answer to that is. They said it's going to be made here in America, right?
Okay.
There's another company out there that just has gained some notoriety here over the last few months that makes a smartphone all in America here, and they're making it work. So it may be just an additional, plug for us to, hey, let's bring some stuff back to America. And people that say, well, you can't bring smartphone business back because an Apple phone would cost $2,500 versus $1,000 or $1,200 at double the cost. And maybe they're just trying to say, hey, that's not true. With our current technology and methods, we're able to actually bring business back, and they're wanting to show people. That might be really what it's about.
Or it may just be that the Trump organization is going to make some money off this deal.
True.
That's very possible.
There was a movie in 1996 or 7 called Tin Cup.
Oh, yeah.
And it had Kevin Costner in it, and he's a pro golfer, and he goes in, and he's kind of falling apart at the time, and he goes out to the driving range, and he tells his caddy, who's Cheech Marin, swipe a few of these balls when you get a chance and put them in the bag. If we swipe enough free crap, we might even pay for this fiasco. So, I don't know. Anyway, I'm not sure if that applies to this situation or not, but I do think that Trump is going to be an opportunist. That's why he got the job. But I think that the Trump organization, while it's not being run by Trump, has a duty to, it has a board and all that kind of thing. So it's going to try to make money. And so I don't think there's necessarily anything wrong with that. If you don't want a Trump phone, don't buy a Trump phone. It'll be interesting to see how it goes, because I think the phone is supposed to be $499. And then in true Trump fashion, the monthly fee for it is $47.45 a month, because he's 47th president and 45th president.
Right.
And why he didn't do 45, 47? Well, because it's an extra $2. And I'm sure that he'd rather have another $2 a month. So we'll see.
Well, I was joking about the KISS toilet seats, but I just looked it up. They really do have them. Wooden toilet seat covers in 8 designs, 8 album covers. It says, potty like a rock star. So anyway,
My goodness.
You can buy a KISS toilet seat. Talking about current events with Randy and Jake, Floyd Financial Group. I am glad that our audience tunes in for this nonsensical stuff. We do occasionally have some serious stuff here, but it's always a fun get-together every Saturday with you guys on the radio. Look forward to it every week. If you are listening to the program, I'm talking to listeners right now, anything we say resonates with you, you'd like to get in and sit down and talk to these guys here at Floyd Financial Group. They really, really do know what they're doing when it comes to financial services. Many times during the commercial breaks, these guys will be talking about or alert me that this changed or that changed, and they're really making moves as things happen. They're very proactive. If you'd like somebody like that in your corner handling your retirement finances or your investment finances, give us a call here at Floyd Financial Group and request your no-cost, no-obligation retirement review. Our number, 417-889-7233, 417-889-7233. That's the number to call. Leave your name, telephone number. Ashley will call you back during the week and set up that appointment. Again, no cost, no obligation, and absolutely no judgment. We'll meet you where you are. You can also find out more about us online at FloydFinancialGroup.com. Randy and Jake, time for a break. We come back here on Show Me the Money. We're going to be talking about what to expect during the first 5 years in retirement when our show continues on 104.1 FM KSGF, where Springfield comes to talk.
Ready for another helping of some more real money talk? Thought so. Now, here's another serving of Show Me the Money with your hosts, Randy and Jake Floyd, with Jeff Shade.
Welcome back, everybody. This is Randy and Jake. You're listening to Show Me the Money. And on a more serious note here, we're going to get back to basics here. What to expect during the first 5 years of retirement.
That's right, Randy. We have a lot of fun on the radio program, but this is a serious topic, and that's the first 5 years of retirement. You're transitioning from something that more than likely you've done for 30, 35 years. It is ingrained in you. You're very good at your job, but boy, during those first 5 years of retirement, this is like having a new job or a new environment. You just don't know what to do with yourself, so I want to dive into that one a little bit. Transitioning from saving to spending, that can be a difficult thing for some people, right, Randy? What advice do you have to give to people?
Oh, yeah, for sure. When people get to the point to where they're really ready to pull the trigger and retire, like you said, they've been working a job, they've had a paycheck that got direct deposited based on what they did for work all this time, and they aren't really sure, how's it going to go? How do you get money into my account so I can pay my bills each month?
Yeah.
Can you withhold taxes and all those things? And there's a lot of questions there. And how much can I really withdraw? And have I saved enough? One of the things I always talk about is how my sister, when she retired, her husband was an orthodontist, had a really big orthodontics practice, made tons of money. And then all of a sudden, when she retired, she goes, I'm on a fixed income. Now, let me tell you, her fixed income was solid, but she still felt like she was on a fixed income.
Right.
And so it was just something that she had to warm up to and figure out.
Absolutely. And I think a lot of people don't realize that you can create a fixed income that's more than enough than what you need. But yeah, when you transition from saving to spending, you're going from somebody else paying your paycheck to you paying your paycheck. So you're kind of the employer in addition to the employee. Next one, spending might be a little higher than expected. Do you find, Randy, that when people get into retirement, they come into you in the first year or so, they go, wow, I didn't think I was going to spend this much money?
I think the biggest thing that we see is, used to be when I first got in this business, people would say, well, when you retire, you only need about 60 or 70% of what you needed when you were working. No, I used to question that. I would tell you that most people, when they come in here and they're ready to retire, they are not looking to take a pay cut.
No.
A lot of times they haven't really thought yet about, well, what is my actual budget? Because, most of us work, we have kids, we pay off our house, we make more money as we are time and grade at our job, and we don't really have a budget later in life. And so we're not trying to put people necessarily on a tight budget and choke off their fun, but they do need to come to a realization of what it costs for them to do what it is they want to do in retirement, whether that be sit on the back porch and watch your cattle grow, or if you want to ride bikes across Europe, if you want to take a cruise every 90 days, or maybe a 90-day cruise, or you want to travel to Europe, or you want to run down to Bradleyville at Taney at Beaver Creek and catch brown bass out of the creek. Whatever it is, it all costs money, and it's different for each person, but it's important that we identify what that is and really put some numbers together so that we are not surprised.
Yeah, and we call these the go-go years, and that's the time that it's almost like Saturday. Every day is Saturday when you're in the go-go years. You spend your most money on Saturday, but you're right. If you want to go fishing, you can fish off the bank with a cane pole and a line and some worms and a hook, or you can buy the most expensive fishing gear and you can go out in a bass boat. And it's the same way with bicycle riding. You know that, Randy. You can get yourself a bike for $500-$600. You can get yourself a bike for $20,000. It just depends on what your level of this hobby is going to be. And also in retirement, I think healthcare expenses can be a lot more too. There are just so many things that you neglect in retirement. So if it's not 60%, Randy, would you suggest that people budget 90%, 100%, 110%? How do you do it?
It's a little different for each person, but I think one of the most important things is that we have a good open conversation about what it is that you want to do and what you're trying to accomplish in retirement. From there, we can kind of put a number to it and then reverse engineer the plan and see if it's going to work and see what tweaks we may have to make to that plan. So just really important that we understand what people are wanting to do and help them get what they want out of retirement.
That's right. And there's also family support. Don't forget that, too. Many people are in the sandwich generation. Even though you may be getting into retirement, you may be supporting kids under you. You may be supporting parents over you as well, too. So there's so many things to consider when it gets into retirement when you're planning your spending. Next one, sequence of return risk. We cannot predict the market. Let's talk about that a little bit, Randy, and give an example of sequence of return risk.
Sure thing. So when we retire, we never know if we're going to be in an up market where we've had a bear market cycle and now we're in a bull market, or if we've just had a bull market and now we're headed to a bear market. We never have control over that. So when we start setting up retirement income strategies, we need to look at, okay, number one, how much do you need? What percentage of that is that number out of your total nest egg that we need per year? And let's say it's 5%. Let's say you got $1 million. You're drawing out $50,000 a year. If that's the case, and we are in a bull market where the market's going up, you may make 10, 12, 15, might even make 20% some years. And so we store that money away for the time that comes down the pike when we're not making money and maybe we're in a negative 20% bear market and we need to have saved up some additional eggs for frying during that time, right? So we never know what that sequence is going to be, but it's very important that we consider that, because the story is Mr. Brown and Mr. Green. Mr. Brown and Mr. Green, they retired at the same time. They both had $1 million. They both started drawing 5% or $50,000 a year. But Mr. Green had the benefit of retiring into an up market. Mr. Brown did not. And all they did was they hadn't really done any planning. They just threw their money out there into the market. And Mr. Green, after just a few years, had a lot more money than he started with. And Mr. Brown, by the time he was 82, was out of money. So we have to remember that we can't just go out and blindly spend money. We need a plan. We need an income plan. We need to follow the plan. Now, that doesn't mean that we can't take an extra trip. It doesn't mean that we don't plan for the roof on the house that leaks. It doesn't mean we don't plan for new cars. We want to plan for all those things. But it's really important that we understand what's going to happen to my nest egg when things don't go right.
What to expect during the first 5 years of retirement. That's what we're talking about with Randy and Jake Floyd here at Floyd Financial Group. Our number, 417-889-7233. If you'd like to set up a consultation with Randy or Jake here, casual conversation, 417-889-7233. You can make that call right now if you want. Next one's going to be healthcare and insurance adjustments. If you're not yet Medicare age, healthcare can be a problem. Randy, how do we address that?
Well, it's just something we have to go in with our eyes wide open on. If somebody's going to retire early, and many times this is what keeps people from retiring early, because, even under what we affectionately call, what we call Obamacare, right? Mm-hmm. Which is basically our national health system, basically at this point for people that are under age 65 and not able to be on Medicare.
I really don't feel too much affection for Obamacare, if I'm being honest.
I knew that would wake you. I knew you weren't asleep, Jake, but you were. I thought
I'm still here.
Any second he's going to chime in with something, and I was not disappointed.
Yeah, that's one of the main things that keeps people from retiring is they look at your total income that comes into the household, and then that determines how much of a government subsidy that you get. So if you have a decent amount of income, a person may pay $800, $1,000, maybe even $1,200 a month for insurance. And so that's certainly something that keeps people from retiring early. So we have to think about all those things. And, if we're within 18 months of age 65, maybe we just take a COBRA plan. If you've had an extenuating circumstance, a health issue, you might be able to extend that as far out as 36 months if you needed to. But there's just a lot of things to look at. Also, long-term care, what's the possibility of that? There's about a 70% chance you'll need some type of long-term care before you leave the planet. So we have to kind of figure out what happens there and how do we navigate that. So just a lot of things in the healthcare and the insurance department that we cover at each of our consultations.
And when you reach 65, Medicare kicks in. It's not the answer to everything. It sure does help, but I'm going through that right now. My wife needs hearing aids. You can buy those $200 hearing aids that you see the commercials on the retro TV shows, and they'll be okay, but they'll bring everything else up in addition to what you can't hear. Generally not a good answer, but the custom-designed hearing aids for someone specifically tuned for their individual situation can be $4,000, $5,000, $6,000. So hearing aids, something Medicare doesn't cover, also vision, and also dental. Let's continue here talking about some of the things to expect during the first 5 years of retirement. Lifestyle changes and identity shifts. And this is many times where the woman makes the appointment with you, Randy, and comes in and shuts the door and says, you got to help me. He's driving me crazy.
Well, I will tell you, my brother-in-law, who is no longer with us, when he retired, he had worked for, probably nearly 50 years in his profession. And it was really his identity.
Right.
And he really didn't have a lot of extracurricular activities he did outside of work. So it was really a struggle for him. And kind of like you've alluded to, too, I still have some people at church that over the years, we watched them kind of grow into retirement. And so we manage some money for them. And sometimes I hear from the wives, why don't you call and go play some golf with my husband? That type thing.
Just
yes,
another service that you offer, playing golf with the husband.
That's true. So, and sometimes can be a struggle. Some people find that volunteering helps. Some people find that if they play golf, they can join a league or there's a bunch of guys they can get with. I know guys that once they retire, they play golf in the morning with their buddies a couple of times a week during the week while everybody else is at work, and they really love playing out there because the course isn't crowded and they can have a good time there. Then we find some people that actually go back to work. Just talking with a young lady yesterday, She just decided she was going to go back to work, and so she took a job.
Yeah, we see that a lot, but we also see, I can think of several clients that simply don't retire because they don't know what they do with their time. They don't hate their job and, they're 70, 71, 73, 75, and they can still do their job great and they like going to work, and there's nothing wrong with that either. Retirement is a relatively new concept. It used to be you just worked and you worked until you died. So nothing wrong with retirement. Retirement's a great thing, assuming you save and you can afford to do it and all that. But I think there's a lot of people today that wasn't the case, 100 years ago. That are just very unhappy at their job. So being able to quit and be able to do the things you want to do is what retirement's all about. And frankly, a lot of the reason I have a job. But it's not for everybody. Some people are not good at watching Netflix or traveling and that kind of thing. And they're good at their trade and they enjoy what they do. And that's great too.
Well, you've got to have some sort of a hobby, and there was a fellow that I knew whose hobby was woodworking, and when he retired, he built some things in his shop, but furthermore, he went off to Home Depot and taught other people how to do it. He ran those classes, and before you know it, he was running 2 and 3 classes. He was running classes at 3 or 4 Home Depots, and he's just happy as he can be doing what he loves to do. So find some purpose in retirement. Retire to something. Finally, the first 5 years of retirement is a chance for you to course correct. It's a chance for you to maybe put yourself on a different path. It's sort of a learning phase.
Right. I've often said, especially as I've kind of gotten older and I can look back over life, we have different seasons of life. Here we are, we're growing up, and we're really not even aware that we really are until we're about 12. And then all of a sudden, our parents know nothing. We know everything until we're about 20. Then we get married, we start to have our own kids, and then we raise kids, and then we come into retirement. There's just different seasons of life. And so when you get here, it is an adjustment. And I will tell people that are listening to the show, if you're thinking of retiring, I will tell you that we don't have many people that come in and say, Randy, I just wish I had never done this. This is just so horrible. In fact, most of them come in and say, so how's retirement? And they go, living the dream. And I mean it.
I wish I would have retired 2 years ago.
Yeah, exactly. They didn't come see us, so they could have retired, but they didn't have the chance. But I understand what you're saying. I mean, I think back to when I was a kid, and all I did was I went to school, and during the summertime, I could do whatever I want. Retirement's sort of like that, too. You got to get through that period of time working before you can retire and go back to being a kid again. Talking with Randy, Jake Floyd of Floyd Financial Group, and I know, Randy, you're riding bikes again. I love that about you.
Oh, yeah.
What to expect during the first 5 years of retirement. Again, questions 417-889-7233. Call that number if you'd like to set up a casual conversation with Randy and Jake to talk about your retirement journey. No cost, no obligation. 417-889-7233, online at FloydFinancialGroup.com. Time for a break. When we come back, we'll be talking about the importance of 401ks and IRAs when our show continues here on 104.1 FM KSGF, where Springfield comes to talk.
We're back with your financial catch of the day, and it's a big one. Here's more Show Me the Money Radio with your hosts, Randy Floyd, Jake Floyd, and Jeff Shade.
Welcome back, everybody. This is Randy and Jake. In our third segment here, we're going to be talking about 401k plans and building retirement wealth.
And Randy, I think most people know what a 401k plan is. It's actually a tax code number. We call it a 401k plan, but it just simply means that when you're working, it's sort of a way for you to retire. It's not exactly forced, but it is a pretty good idea. Can you explain briefly about a 401k plan if people are not taking advantage of it at work, and why that may be the foundation of your retirement savings?
Sure. A lot of people don't realize that probably not until about 1974, when ERISA, the Employee Retirement Income Security Act, was signed, did we even have such a thing as a 401k or an IRA. And basically what this was designed to do was to give people an incentive to save, because we got to defer the taxes and save the money tax-free, was the original idea, and then pull it out at a later date, maybe when we were making less money than when we were working full-time, and enjoy a lower tax rate on money that we had saved that had never been taxed. Now, since that time, we've had the addition of the Roth IRA back in 1997. And so now we got Roth 401ks, Roth IRAs. And the idea for the Roth is that after you've owned it 5 years and you pull money out of there, you don't owe any taxes on any of the money. Now, I will say this, you don't get the tax benefit up front in the Roth, but we'll talk more about that later in the segment. Anyway, the retirement tool, the 401k, one of the biggest assets and biggest reasons to participate is most companies will give you a match of some sort, maybe up to 3, 4, even 5, maybe 6%. And with rare occasion, there are some companies matching as much as 10%.
Mm-hmm.
And free money, Jeff, is always good.
You talked about the Roth. How should someone decide between the traditional pre-tax 401k and the Roth 401k if both of them are available?
Free money's good. Just ask the looters and rioters.
Well, sometimes you will pay with a rubber bullet to the leg or the head or something like that. It can really hurt. And, I don't mean to veer off, but you and I love these things, Jake. They call it less lethal. It doesn't mean that it's not lethal. It's just less lethal, but it can be lethal.
Yeah, they can't call it not lethal, otherwise there's a lawsuit, So
Yeah, it's just less lethal.
You got to tiptoe around it. As far as Roth goes, which is the question you asked there, there's a lot of back and forth on Roth conversions, funding Roth. In my opinion, I'll let Randy jump in after this and see if he has a different opinion. But in my opinion, if you are in the 22% tax bracket in today's tax code and 3 to 5% for the state, it generally makes sense to use the traditional IRA to offset those taxes, at least to the point where it gets you back down to the 12% bracket. If you are making, let's say 50, 60, 70,000 a year, then the case can be made that maybe paying those taxes now to have an insurance policy against higher taxes in the future could make sense. But I just don't think it makes sense to pay 27% taxes, hoping taxes are going to be higher in the future to offset the Roth. I think 27% is just too much. 17%, maybe that makes sense.
Yeah, I would agree, Jake. I think that everybody's situation is a little different, and we have to look at where they are in their savings life. I mean, are we at 40? Are we at 50? Are we at 60 years of age? Where are we when we're looking to do this? Also, my brother-in-law, I know I've talked about him a lot today, but when he was running his orthodontics practice, we used some special tools that allowed him to save massive amounts of money, more than you can do into a 401k plan. It was a special plan and a lot of doctors and orthodontists and people like that will use it. And so we put away a lot of money, and what it amounted to, a third of his total portfolio would have been out the door to taxes had we not done that. So you look at that and you say, okay, so he was probably in the 40% tax bracket when, with everything all in, we saved him that money and put it into an account where it could grow. So was that a good outcome for him? Yes. Could we have done the same thing, with the Roth 401k, but it would have been less contribution. He'd have had less money to start with. And so does it work out? We have to run a calculation for everybody. We've got good tools that show us, say, hey, what if we do the Roth conversion over a period of time? Is it 5 years? Is it 10 years? Versus doing a traditional IRA and looking at the tax savings now versus the tax savings later. And we can give you the outcome on that. The thing that we don't know is sometimes we have to have a lot of time to make up the money we gave up in taxes. And none of us know the day or the time that we will no longer be here. So do we have time to recover is part of that. It's not one of those situations where you can just say, yep, the Roth makes sense. Does it make sense for a lot of people? Yes. Does it not make sense for a lot of people? Absolutely.
Talk about 401k plans, building retirement wealth with Randy and Jake of Floyd Financial Group. If we got someone listening to the program today who is currently working, they have a 401k. It seems like a great idea all around, but it's not without the ability to make mistakes. What are some of the mistakes that you see people make with 401ks?
Well, sometimes people might get a little overzealous, especially if they're younger, and then they're going to have to take money out of that account and realize the taxes and a penalty, because in any IRA scenario, whether it's be Roth or the 401k or Roth 401k or traditional IRA or 401k or a 457 plan or a 403b plan, if you take it out before 59 and a half, unless you're in law enforcement, there's an exception in those. But if you take that money out early, you're going to have a 10% penalty plus having to pay the tax. So it could be that all you're doing is adding insult to injury because you're already paying the taxes on your income plus the taxes on what you withdraw plus a 10% penalty. So we just need to be sure that when we're putting money over there, we really want that money to be there long term. And the idea is to kind of put it over there, build yourself a structure where you're depositing money in there regularly over the years, and you realize you're just not going to go in there and touch it. Now, once in a while, something happens. You can go out, you can take a loan against your 401k. You can't do that on an IRA. You can't leverage an IRA that way, but you can a 401k. And so if you need to take a loan against that, you will pay interest back, but you're paying the interest to yourself. Mm-hmm. So that's always something to consider. If you get between a rock and a hard spot, need a little bit of cash for a while, I mean, you can certainly do that. But, the biggest mistake I would say is, number one, not funding one. And number two would be maybe overfunding, realizing that you may have to tap that sooner than you think. And then also really figuring out, what is my risk tolerance? A lot of times we see this a lot. People say, I haven't talked to anybody from my 401k plan in the last 7 years. And
Wow.
so sometimes people are not getting the guidance that they really need to make wise decisions for their investments.
Randy, at what point should someone who has a 401k consider rolling it over into an IRA? What are the advantages, disadvantages?
Well, the first thing to know is if you're working for your current employer and you're not 59 and a half, you can't do it.
Okay.
Now, if you've left one behind somewhere, so let's say you had another employer previously, you got maybe $100,000 over there, you're working for a new employer, but you never rolled that over to your current IRA, you can now roll that money out into a traditional IRA, which gives you a couple of things, a lot more choice in what you get to invest in. Because generally speaking, today, especially, we see that most of the 401k plans are really limited on options as to what you get to invest in. And many of them are using what we call target dated funds, which I am really not a fan of.
Tax-free growth and liquidity with the IRA. The IRA also offers many, many more choices than leaving it into a 401k.
Right. Absolutely. It does. It's one of those things, too, that if you do want to take withdrawals, if you take it out of a 401k, it's a 20% mandatory federal withholding. And you'll get the money back if you don't owe it, but you have to wait a year to do it. And the government had your money using it for free. I don't like that. So
No.
if you have that money in an IRA, you can take it out and not pay the tax until it's due that next year, or you can estimate what it's going to be and pay generally a lower number than that.
Is there ever a time, Randy, when there's some benefit to having both a 401k and a Roth IRA, or does it make sense to focus on just one over the other?
No, it actually can be a situation where it makes sense because you're kind of blending that world. I'll tell you myself, I've had a 401k and I had a Roth 401k. I did that because what I was trying to do was play the sweet spot on taxes, plus just put myself aside some money that I knew one day would be tax-free to take out if I decided I wanted to, who knows, whatever came up, right?
Right.
Wanted to do something different and not cost me a big tax bill.
Randy, what one piece of advice would you give to someone, let's say in a minute or so, the best piece of advice regarding these two accounts, 401ks and IRAs? What would that be?
So right now, start funding immediately. Develop a habit to save. Get yourself in a position to where, and if it's 5% or if it's 10%, once you start doing it, if you continue it and automate it, you'll never miss the money.
And every time you get a raise, up that percentage 1%. Like if you get a 3% raise, up your percentage funding 1%, so you learn to live without that money. And then I would also say, if you're already funding and have been funding, don't stop when things get rough in the market. In fact, if anything, that should be an excuse to add more because you're buying things at a discount. There's a guy named Josh Brown that's on TV a lot. He's one of the guys that I follow. And he said, honestly, when the market goes down, unless you're within 2 years of retirement, you should be rejoicing every time it goes down because you're just able to buy more shares with the same amount of money. It's like the only time you should want it to be at a high is when you're retiring or in retirement.
Right.
And so certainly if you're younger, just keep funding.
We're Andy and Jake. Based on our conversation this morning, I'm sure that our listeners may have some questions about Roth 401ks and IRAs. If that is you, you're worried that maybe you're not getting the most out of your 401k or your IRA. You want a little help with that? Well, we're offering just that, the Floyd Financial Group Retirement Review, where we can talk about your 401k and IRA, and it doesn't cost you anything. No cost, no obligation. To get yours, call 417-889-7233. You can make that call right now if you want. Leave your name, telephone number. Ashley will pick that up on Monday morning. She'll give you a call back and set up a convenient time for you to sit down with Randy and Jake, talk about your 401k, your IRA. Remember, it's just a casual conversation, no cost, no judgment. Certainly, we will meet you where you are and no obligation. So make that call right now, 417-889-7233. We would love to meet you. Time for a break, Randy and Jake. We come back here on Show Me the Money. We're going to be talking about 5 key pieces to solving the retirement puzzle when our show continues here in my favorite radio station. It's 104.1 FM KSGF, where Springfield comes to talk.
People of the Ozarks, step away from the fishing pole and prepare to be shown the money, because we're back with more straight talk and honest answers with Randy Floyd, Jake Floyd, and Jeff Shea.
Welcome back, everybody. This is Randy and Jake. You're listening to Show Me the Money, and in this segment, we're going to be talking about 5 key pieces to solving the retirement puzzle.
And Randy, if retirement is drawing near, you might be pondering a dizzying number of questions. The first one would be, when should I retire? Or I guess, when can I retire? I would imagine that is one of the most common questions that you get in your initial meeting with people, right?
Absolutely. People say, when should I retire? And of course, along with that then comes, when should I file for Social Security, right?
Yeah,
That's the other
number
one.
one and
Comes
two
right,
in that order.
comes right along with that, And so everybody's situation is different. The thing that I would say, first and foremost, if you haven't really thought about it and sat down and talked to somebody about really assessing where you are, you should do it now. It's very simple. It doesn't cost anything. We're just going to sit down, have a conversation, drink a cup of coffee or a Diet Coke or a Dr. Pepper, whatever it is you like to drink. Get to know one another a little bit, and you're going to be able to ask us questions that maybe you have. And along the line, we generally find out, too, that there are questions that come up that you really didn't know to ask or hadn't thought of yet. And that's normal because guess what? You've never retired before,
Right.
for the most part. So when exactly? I don't know. It's different for each person. But here's the thing I do know is once in a while we have somebody come in, they say, boy, I just wish I could retire. And we sit down, we look at their stuff and we say, well, why can't you retire? Well, I just don't know if I'll have enough income. Actually, you'll have plenty of income. They go, really? So, they're surprised sometimes because they were just thinking they weren't going to be able to. And so I would just encourage people to give us a call. Let's sit down and talk about it, and let's develop a game plan. Maybe you don't even want to retire now, but maybe you're thinking 5 years from now, I might want to. Now's the time to start the plan and get everything lined up so that when that day comes, you can pull the trigger and get it done.
Yeah, and I think there are a lot of people listening to the program today asking themselves that same question, when can I retire? Well, it depends. You could retire today. Possibly it would be a little bit different retirement than if you'd waited 2 or 3 years. But again, we just got to run those numbers and talk to you about the financial side, but also the non-financial side of retirement, too. As we mentioned, it's okay, we can retire financially, but non-financially, what do you do with your time? There's a little transition period there. When you're rolling down the freeway and you're rolling around 75, 80 miles an hour, you usually just don't slam on the brakes and try to go to zero in a couple of seconds. You tend to want to slow down just a little bit. That's what those exit ramps are for. We're sort of defining how your exit ramp is here in retirement. Next question, or something that I think people should consider when solving the retirement puzzle: how much money am I going to need to retire comfortably? Again, that is one of those it depends things. Randy, what are some of the things that it depends on?
Well, I think a couple things. Number one, if you currently have debt, we need to get rid of that, whether that's a house payment. Now, am I saying you have to have your house paid off to retire? The answer to that is absolutely not. You don't have to. But I will say this, the less debt you have and monthly payments going out, the less income you will need, which is kind of the next thing. What kind of monthly income will I need to live my dream retirement? But we need to look at all that stuff, because if we've got a big bunch of debt that we can retire, well, that will certainly push down what we need monthly, and it also pushes down what we need to have saved in a nest egg to generate that income. So there's no blanket answer as to how much will I need in retirement. Each person's number is different. Each couple's number is different just based on what they're used to, what their lifestyle is that they want in retirement, how much fun they want to have the first couple, 3 years of retirement versus maybe what they will live later. Maybe they've got a bunch of built up travel need, and so they really want to go for the first 2 or 3 years, or whatever it is that they like. So there's no blanket answer, but I would just say this: everybody needs a plan. We need to think that through, and these are great questions that need to be answered.
And I'm going to reiterate something that you said there about debt. I think it would be a very good idea to not take debt into retirement, as little as you can. As you said, if you've got credit cards, let's say, for example, you got $15,000 in credit cards, and that's spread over 3 credit cards. We use the snowball method. That is where you're going to be taking the lowest balance first and concentrating on paying that off. Then when you've paid that off, you use the money that you would have paid with the first credit card, apply that to the second credit card, and so forth, because most times these credit card rates are 25 and 30%, and that is just not something you should do. Secondly, if you do have a car loan, let's say that you got $30,000 on that, then you might want to pay that one off as well, too. Mortgage, a little bit different situation. A lot of people refinanced at 3%, sometimes under 3%. And you got to figure, okay, I've got enough money to pay off the mortgage, but my mortgage is 3%. Could I make more on that in an investment outside? And I think with your help, we probably could, do a little bit better than 2.5%, 3% on that. So those are some of the things to consider if you're considering retirement. Another question that people might ask, Randy, is how can I outlive my money, or when can I outlive my money? And what happens if I outlive my money? How do you address a question like that?
Yeah. So one of the things that we're going to look at when we sit down and we do their income plan, we're going to make sure, as much as humanly possible, that that's not going to ever happen, because we're not going to set you up in a plan that's going to be designed to let you run out of money. Now, we always plan for up markets, for down markets, sideways markets, all those things. And sometimes people say, well, what kind of a withdrawal percentage can I expect to take? I would tell you that we're generally comfortable with a 5% withdrawal. So on $1 million is $50,000 a year. On $500,000 is $25,000 a year, plus your Social Security, plus a pension if you have one. Maybe you got investment properties and all those sorts of things. But we're going to look at the situation and make sure we don't set you up to fail. That's one of the things that we look at. We're always wanting to plan for 90 or 95, because nobody wants to live to 90 or 95 and be out of money.
Yeah. And if you outlive your money, that could be a fate worse than death. And a lot of people say that in surveys. I would rather be dead than outlive my money. So let's do a comprehensive plan to make sure that that doesn't happen. Next one, I think a lot of people are wondering, okay, I've gotten into retirement. I've got a variety of different investments in different places. Which investments should I draw from first? How do you handle that question?
Yeah, so again, we look at the income that comes in, whether it be pension, Social Security, then investment income, and all those sorts of things. So we figure out, what tax bracket are you going to be landing in? And is there a way, if we have Roth money, is there a way for us to avoid going into the next higher tax bracket? And does it make sense to spend that money to avoid doing that? Again, we have to look at account size, how much is in the Roth versus the traditional, how much income do we need out of our investments, how much is coming from Social Security, where are we really going to land? So it is a design plan by individual couple or client. So it's not one of those things we can just answer straight up, but there are many ways to look at it. So again, if we have Roth IRAs versus traditional IRAs versus savings accounts versus dividend income. In some cases, if you're not out of the 12% tax bracket for the Fed, you're not going to pay any income tax on dividends sometimes. Sometimes, too, if we're going to take a capital gain out of a brokerage account and we remain in the 12% tax bracket and it's a long-term capital gain, we may not pay any tax on that as well. So there's just a lot of things to consider, and everybody's situation is different, and we just look at each one as it comes.
And Randy, to your point about taxes, I want to explore that a little bit. When you're working, your employer withholds taxes and all that's fine and dandy. You may or may not get a refund. But when you're in retirement, you being the employer, you've got to figure for these taxes. How do you go about helping people to figure out what taxes they're liable for, and then how do they pay those? Do you withhold them? I mean, how do you help people do quarterlies, all that sort of thing?
Sure. So if they have a tax advisor they're currently using, we don't have any issue with them continuing that. But one of the things we're going to look at is all the income sources coming in. How does that add up, and how does that taxation look? We don't file taxes here, but we understand taxes here and can help people to look at those different income streams and realize how they're going to be taxed. And from there, we make good, sound decisions based on income and tax strategies.
And a lot of people don't realize that Social Security is taxed. Now, we're hoping that part of this big, beautiful bill comes back and we eliminate Social Security taxes. But Social Security can be taxed up to a very large amount of this Social Security check.
Right. It can actually be at the federal level between 0%, 50%, and as much as 85 cents of the dollar is subject to taxes. Mm-hmm. So if you're a single and you're $24,000 a year or less, you're going to be paying 0. If you're between 25 and 32,000, you're going to be paying on 50%. If you get above that number as a single, you're going to be paying on 85 cents on the dollar. For married couples, it's 34 and 40. I never can remember these numbers exactly, Jeff, but it's like 44,000. If you go above that number, you're going to be taxed on 85 cents on the dollar of your Social Security. So again, as we look at potential Roth income that can help us with not only maybe if we're not 65, qualifying for a larger subsidy for Obamacare, we also can look at that from a tax perspective as well.
And again, if you've got a CPA, defer to your CPA. They can help you figure out how much tax you're going to pay and also figure out what your quarterly payments would be if you want to do it that way. But if people do not want to make the quarterly payments, Jake, do we have a way to withhold taxes from these investments before we pass the check on to them?
And we do, except for the fact that if it's a brokerage account, we really don't have a way to do taxation. If we have IRA accounts, annuity accounts, that sort of thing, money market accounts, many times we can withhold taxes, but in some cases we cannot. In that case, though, we will help people to really understand what their tax burden is going to be, and we might actually have them file their quarterly tax return, or we might withhold a little bit more from the IRA to offset what we take out of the brokerage account.
All right, we're talking about the key pieces of solving the retirement puzzle. Last one I want to talk about today, Randy, is am I certain that my assets will go to the right people or charitable organizations when I am gone? That would be estate planning. How do we handle answering that particular question?
Yeah, so when we look at that, we know that probate's a terrible thing. In fact, what is probate? Probate, basically, people say, I have a will, I'm not going to probate. Well, actually, no. If all you have is a will, now you can use beneficiary designations on your IRAs and your insurance policies and your 401ks and your brokerage accounts. But here's the thing, if you just have a will, you're assured that that's going to probate because that is instructions to the probate court. And it's been said that doing that, sending your people to probate, is kind of like filing a lawsuit against them. And it's true because probate in the state of Missouri takes about 8 months on average to get done. And then if you have anybody that contests anything, we've seen it take years because people like to fight whenever there's a dollar or two involved. So I would tell you that the best thing you can do is consult an estate planning attorney. We just happen to have one of those that resides in the building here. Elizabeth Floyd has been involved in estate planning and is an estate planning attorney for many, many years. She's been doing work with other attorneys. And then, of course, she has a bar number and is an estate planning attorney now herself. So we can help you in that area. And I will say this, Elizabeth is available to talk to people. Now, she stays pretty busy. So if you call and want to talk to Elizabeth, you may be out 4 or 5 weeks before you get to see her. But I will tell you, it will be worth it because she's very thorough. And I hear all the time how she really made people feel comfortable. And for the first time, they understood why they might need some estate planning documents.
That's right. And Elizabeth's a busy, busy woman here. But that is quite an asset to have here within the organization, is an estate planning attorney. So again, if you've got questions, consult us here at Floyd Financial Group, and we'll be happy to hook you up with Elizabeth here. You say that she resides right here in the building. She does go home, though, right? She doesn't just spend the night here, I would think, right?
Most nights, yep.
Most of the time.
Yeah. Once in a while.
She's been known to burn the midnight oil occasionally.
Right. Well, she's got to get home and feed the critters. Do you feed the critters for her if she can't feed them there at home?
Yeah, if I have to, or Trevor helps out a lot, too. So.
I see. How many chickens you got around the house just yet?
So right now we have 5 chickens, 2 rabbits. She wants to expand the flock, though, so we'll have to... I'm going to have to find some kind of limit to put on this thing. Otherwise, we'll have like 10 million chickens. But
that's right.
We'll
you got special chickens, though. They lay colored eggs, do they not?
Well, some of them have different colored eggs that they lay, but we have all bantams right now. So they're the small ones. So they're like 1 to 3 pounds versus the big mean rooster, even though the bantam is, I mean, he's every bit as mean as any rooster out there, but he's only 1.5 pounds, 2 pounds. So he's not as scary as some of those big Rhode Island Red 10-pounders.
He's meaner than a junkyard dog, as they say. Talking with Randy and Jake of Floyd Financial Group, we've been talking about some of the key pieces to solving the retirement puzzle. Again, if your retirement is a puzzle, there is no easy question to this. If you think there is, you might be in for a disappointment. The answers will vary from person to person. So get in, talk to us here at Floyd Financial Group. We'd love to meet you. 417-889-7233 is our telephone number. 417-889-7233. You can make that call right now if you want to request your no-obligation appointment, and no judgment. Will meet you where you are. Leave your name, telephone number. Ashley will set up that appointment for you sooner than later. We're reaching out to you. Reach back to us. We'd love to meet you. 417-889-7233. You can also find out more about us online at FloydFinancialGroup.com. Randy and Jake, this has been a great show. For our listeners who missed any part of it, remember we're a podcast. Go to wherever you get your podcast, search for Show Me the Money with Randy and Jake. You'll find this show and many of our past shows so you can stay on top of your journey towards a confident retirement. So we got to get out of here for this week. Randy and Jake, thank you so much for your time. But most importantly, I always want to thank the best listeners in the world, ours right here in the last bastion of sanity, Springfield, Missouri. Get out there, have a great weekend. Enjoy the first day of summer. We'll talk to you again next week right here with another edition of Show Me the Money on 104.1 FM KSGF, where Springfield comes to talk.
The information provided in the preceding program is for educational purposes only and is not intended as investment advice for any individual or entity. All information contained herein is believed to be from reliable sources. However, we make no representations as to its completeness or accuracy. The opinions expressed are subject to change without notice and do not constitute financial, legal, or tax advice. Please consult your financial professional before executing any financial strategy. Financial planning is offered through Floyd Financial Group, LLC,